But then elaborate upon how you think the deal pipeline is looking like, because that kind of seems to be an industry problem right now that they're all grappling with. How about you?
Yeah, I can take that. I think if you look at the last 3 or 4 quarters, the conversion of order book to revenue definitely improved. But there is a fair amount of elongation in the deal cycles still persisting, driven by two factors. One, still a very strong focus on ROI and prioritization from a customer spend standpoint. Even if they have the budgets, there is a very high degree of scrutiny and multiple layers of approval cycles. Second, as you start thinking about some of these deals which require an element of transformation, and you can start now thinking about AI becoming a little bit more mainstream, there are multiple stakeholders that are popping up on the client side that now need to actually have a say in this cycle. And these are early days for at-scale AI adoption. So I think some of that is definitely putting some pressure on decision time cycles. We've seen that play out in Q2 as well. And I think as some of this becomes a little bit more mainstream, we will hopefully see faster closure on these decisions. But for now, there's definitely a tug of war between just making sure that we have enough of an order book and then making sure that we continue to build the order book as well with some of these larger deals that are sitting in the pipe.
Okay, point taken. But deal win momentum, a bit more color around that. And I ask you that because the street is a bit disappointed. So with respect to the pipeline, if you can talk to me about the nature of the deals which is there, what's the size and quantum of that? Either of you can come in on this one.
Yeah, I think the deal pipeline is actually up about 23% on a YOY basis in Q2 and also up low single digits on a sequential basis. We also had a pretty big jump YOY last quarter. So I think if you look at the stages, origination of deals clearly seems to be originating deals. There are two trends to call out in the pipeline. One, we've definitely seen, even in the TCV number, we've seen a healthy mix of the sub 10 million deal category, even actually the sub 5 million deal category. That's been the biggest jump even on a YOY basis. That indicates that in-year quick consumption, short burst programs are getting funded. And that's a sign of discretionary spend slowly coming back. We called that out in March, April as well. And we are seeing that play out in the last quarter as well. And that's sitting somewhere in that 207 million TCV number. Second thing that we've seen in the pipeline is, I think I talked about early AI adoption trends. We've seen customer inquiries on existing services that they may be doing in a traditional way, production support, app management, enhancements, service desk, infra, where they think the opportunity to bend the cost curve by adopting an AI-based solution is very high. But again, that's where I think a lot of deal making will move to. There are also triangulates with the ISG data that came out yesterday around expansion of infra and remote services deals, where I think the opportunity to actually play a bigger role by taking a tech-led solution is much higher. So I think, again, more to be done, more to be seen. Early stages of a whole new trend emerging in how some of the traditional services will be resolutioned, repriced, and delivered in a very different manner.